Welcome to The Curve Weekly, the podcast that keeps you up to date with all of the money, business, and stock market tea.
Brought to you by the Curve's research team. It's the latest insights on what's happening in the stock market, companies, other money-related news so that you can stay educated and ahead of the curve.
You can thank us later for sounding smarter than those finance bros at your next dinner party.
If you've been following social media at all recently, you will know that the LA fires have had such a significant impact, not only physically, emotionally, but financially on the US and the world. So we're going to go through some of the numbers, why you need to be across it, what are the financial impacts, why insurance is so incredibly important, and how you can vote with your wallet by investing in companies that are having a positive impact on the environment so we can prevent the increased frequency of these disasters.
Oh gosh, this is so sad to talk about, isn't it?
I know. I've been watching it unfold on social media and it's consumed my newsfeed. And fair enough, it is one of the most deadly wildfires in US history. And it's still going on. The numbers are still coming through, but it looks like it's going to be one of the biggest disasters as well, in natural disasters in US history. So the scale of it, I've been looking at maps and everything, just trying to comprehend the scale of it. And I've been to LA a long, long time ago, but talking to friends that live there or that have been there and they're just saying how massive it is and the destruction, the lives that have been lost, all of that. And I thought I really want to kind of run through some of the numbers. They are changing every day, but I just want to run through some of the numbers so that we can see the impact essentially, and how that impacts the financial world, and I guess yourself personally.
This conversation's important on many levels, but I was having a drink with Meggie Palmer, who we've had on the podcast before, and I recorded another conversation with her. If you want to listen to her first one, it's a really good one for the start of the year. It's Raising the Curve 60, How to Get a Pay Rise. She lives over here in the States and she has a house that has recently, it wasn't in the fires, but it's had they've had to make a massive insurance claim essentially because of something that happened, $500,000 potentially lost through what's happened to her. And we were just discussing the LA fires, what's happened with her house, just the importance of understanding your insurance policies, having insurance policies, the fine print, knowing, for her, she's we won't even get half of it covered. And that's from really fighting tooth and nail with the insurance company. People are having to leave their homes and everything they've ever known. That is tragic. But also the reality that we are in a world where natural disasters are just going to be happening more and more and more. With 100%. Climate change, we need to be prepared financially as well as everything else to make sure we're protecting ourselves, because the reality is just this is going to become, unfortunately, quite normal. And just reading what you'd written in the Curve Weekly newsletter, the last thing you think about is the finances, right? Because people first, and planet 100%. And all of that. But I just had no idea the magnitude of the financial impact.
Yeah, I'll get onto the insurance thing. It's so important. And it's important to regularly check as well, because for myself, I bought my house 7 years ago. The value's changed. What I've bought and what is in that house has now changed. It's kind of putting a reminder in your calendar to do almost a yearly audit of okay, is this expensive couch that I bought insured? Is my car still insured? Is all these things, just making sure that the policies haven't changed or anything like that. I remember when, and this is not even anywhere near what these people have been through, but when my phone got stolen in Paris last year, and I was I've got insurance, it's fine. I didn't read the small print, and it was if anything over, I think it was $700, you needed to have an exception to make that covered. It was still $700, so I was fine with that, but it wasn't the full repurchase amount. And I was imagine that, but on everything in your house. Let alone the emotional trauma of losing your home for these people, your entire life savings, your biggest asset.
It's kind of incomprehensible, isn't it?
We spend our whole life saving for a home. Well, most of us saving and having the ability to buy a house and providing that security, building a home in an environment that you enjoy and that people can raise families in if they want to, and then to get that taken away. And I remember watching an interview with someone and they were I feel like a ghost. I don't have any photos. I don't have any belongings.
Oh.
You'd be I don't have my passport. I don't have my birth certificate. I've lost everything.
Shit, it's so scary.
Yeah.
And
Oh.
yeah, it's just like, yeah, it's pretty heartbreaking. I think one of the things that you wrote in the newsletter as well is, and it's so true, natural disasters don't discriminate. It's nothing to do with your socioeconomic status, how big and beautiful your house is. Like, there were giant, beautiful mansions completely destroyed, and, you know, like lower middle class family homes that had, you know, a huge amount of people living in them. Like, it was, it's kind of out of our control. And I think that the most that you can do to control your own personal situation is making sure that you've got things like insurance, that you read the fine print, that you understand. And honestly, if you hate contracts or anything like that, which I'm terrible at reading the fine print, like so bad, use ChatGPT, like dump everything into ChatGPT and get it to pull out, like, if in this case, what would happen?
If you get to a position where you're struggling to pay your insurance, pick up the phone and call your insurance provider. Don't just let it lapse. Don't just miss payments, because then it will automatically cancel.
This has just happened to me with my health insurance. I had the wrong details and they cancelled it and I had no idea. And I was like, oh.
And that's when something will probably happen and you'll think you're insured and you're not. You'd be surprised how, I guess, accommodating some big financial institutions can be, whether it's a bank and it's your mortgage that you want to pause, if it's an insurance company, you know, you can also shop around. Like there is alternative solutions rather than just being like, I can't afford it and letting it lapse.
I also think that changing your perspective on insurance is like a luxury or a boring thing or whatever. It's like, it should be an essential. It's a bill. It's something that you just need to pay.
Yeah, protecting your wealth is just as important as growing your wealth. There's no point in growing it if you're not protecting it.
Should we move into some of the numbers, Vic?
Yes. Okay. So 10. So that's the number of days that LA has been burning now. By the time this podcast comes out, it's probably going to be higher. 25 is the number of people that have died. 12,000 is the number of structures that have disappeared, from schools to shops to homes. 200,000, that's the number of people that have been displaced. And again, these numbers are changing literally every day, and no doubt that's probably somewhere a lot higher by now. 100, that's the percentage increase that landlords have increased their rent for taking advantage of people that are displaced, which is absolutely disgusting. And there's actually enforcements are cracking down on it in terms of people not being able to do that, which is thank goodness, because that's absolutely disgusting.
I mean, that should be illegal.
12 is the number of countries that Heidi Montag's song is number one in. So Heidi and Spencer Pratt lost their house and they have blown up on TikTok, and everyone's like, we're going to support them by making Heidi's song, which in my opinion is absolutely terrible, number one. And she's number one in 12 countries across the world. Like, this was kind of the glimmer of hope. I was like, this is cool that social media can create such a movement that now they're getting paid royalties from this song to help rebuild their house.
Okay, we're going to play a little section now.
Sounds terrible, but amazing that people are like, you know what? I'm on the other side of the world and I'm going to do my bit to help these people rebuild their house.
Is it bad that my immediate reaction is, I mean, I'm glad that people are helping them, but like...
What about all the other people? Yeah, 100%.
You'd be better to donate to causes, which we'll link in the podcast show notes, and so that that's distributed evenly rather than just going to like...
No, I agree, but I thought that was just...
Sorry, not to be negative, Nancy. It is... I know what you mean.
20 billion, that's the dollar figure of insurance payouts that they're expecting. So this is people that have got their homes insured or their contents insured, cars, and are going to be claiming from insurance providers. 275 billion is the kind of economic loss that the country is going to incur. And what this means is this is the destruction of homes and businesses. It's the damages to water supplies, infrastructure, bridges, all of that. It's the impact of the financial impact of evacuation orders. So getting people out, putting them up in other places to live in the short term. It's the cost of rebuilding or relocating those people, emergency services, all the firefighters that had to swarm in and help put out the fires. Also the healthcare costs for people that have been inhaling smoke. That's kind of what we call, when we talk about economic loss, $275 billion. That is insane, considering the fire department was asking the county for an extra $7 million funding, and they said no. And this is what everyone's backlash is like. If we had had that money and that resource, we could have prevented a lot of this. But you just put those two dollar figures side by side, and it's obviously a no-brainer.
I think that that's a really good example, though, of, there's so much like arguments around business versus planet, like capitalism and business growth at the risk of everything else. But at the end of the day, like the financial loss of not caring for the planet is going to be tenfold over what you could ever create through businesses.
1,000-fold greater. 100%,
it's just like, it's kind of a no-brainer. And when you see those numbers side by side, it really does put in perspective, like having like financial losses in the short term from a business perspective is going to be long-term what saves not only millions of lives and the actual land that we live on, but also money. The argument is like the financial loss is why people don't want to put time and energy and money into like trying to sort out climate change, and yet the financial implications of not doing that are so much greater.
Well, it's like people think of, okay, well, I don't need to spend money on this because, well, yes, there's an increased likelihood, but the likelihood that it will happen is probably still low. It's like, yes, but when it does, and this is becoming more frequent, you hit the nail on the head. These climate disasters are becoming more and more frequent and bigger and more costly. So we have to spend money on preventing these events from happening. In doing that, it's funneling money into protecting the environment. And my last figure is 1.6. Can you guess what that figure relates to?
I'm scared, and no, I have no idea.
How much warmer the Earth was this year. So we have now officially passed through the 1.5 degree threshold, and we're at 1.6. 2024 was the hottest on record, and the first time that we breached that 1.5 degrees Celsius of global warming. And 10 of the hottest years have been in the last decade. We're not doing our job. We're not doing enough to reduce that. Not only, we shouldn't be reducing it below 1.5, we should be reducing it to not getting warmer at all. 1.5 is a cop-out, and 1.6 is above 1.5 anyway. So do we just move the needle and go, okay, let's make it not increase by 2 degrees. Let's just move the needle. It's like, no. Because we'll be having these $275 billion disasters.
Oh my God.
Sorry?
No, I'm just like, it just makes me so upset, and I feel so, I don't know, it just makes me feel really, like what else can we do? Like what, and maybe the conversation and something that we could look at doing an episode on is how can we try and use our money to really fight back against the companies that are destroying the planet and funneling money into the companies that are doing their best to be innovative and create alternative ways of living and being, because it's, you can feel so helpless with like, our limited resources, but when we pull it together, it's not nothing. It's
companies and governments, remember. Governments and policymakers are a big part of this. And when you vote for people in power who don't have climate as one of their key policies, this is what happens. So for anyone who's like, politics is not for me.
Oh, God.
If you live on planet Earth, it is. So the flow-on effects of this is this will give a GDP boost to the US, and GDP is gross domestic product, and that's the output of an economy. And why is this? Well, GDP measures reconstruction, not destruction. So if you think back to like those floods that we had in the Hawke's Bay in New Zealand, earthquakes, for example, we have to rebuild. And with doing that, we have to engage, construction companies. We have to engage, we have to buy building materials. We have to do all of that, which leads to like a spike in GDP. So there will be some figures coming out that will look good, but it's economic figure. It's not like a great data point to look at, but it will have a positive effect on that. One thing I wanted to explain, though, is the number that I mentioned, the $20 billion of insurance payouts. Insurance companies work whereby, say we paid $200 a year to insure our car, our house, whatever. They put that into a fund. It's pulled together with hundreds of thousands of other people's money. And then, oops, okay, I've had an accident. I need to pull out from that fund. And so they have all these checks and balances and kind of algorithms going on, all these risk calculations around where people's assets are that are putting money into the fund and what percentage of people they think will pull money out of the fund. So they're trying to balance those inflows and outflows, essentially. And the money going in is called premiums, and that's what we pay each month or each year. And the money going out is when you make a claim. So the fact that there is now $20 billion of insurance claims that are expected to happen, this is massive, and insurance companies, won't be able to cope because that's everyone drawing down on the fund essentially at the same time. And therefore, the government has to step in and help people in terms of those payouts because they're not, calculating for big payouts like this. The other way they get around it is in the following years or months, they just increase your premiums to help fill up the tank again and fill up that fund. So people in LA in particular, and probably the US, more broadly, will see insurance premiums go up. We've been seeing it all around the world, to be honest, as, like you said, these natural disasters become more and more frequent. That means that there is an increased risk of people drawing down on that fund. So the insurance companies have to make up for that, and they increase the premiums. That impacts house values because for people now, particularly in these high risk areas like LA, they might have previously bought, just for example's sake, a $1 million house and say it costs $10,000 to insure a year. That doesn't really move the needle. Yes, you have to factor in that $10,000 into your purchase price. But if that $10,000, and I'm just using this from example's sake, I'm not saying that insurance premiums are going to go up by this much. If that $10,000 now goes up to $100,000 a year, now what you can afford as a buyer goes down because you have to factor in that $100,000 into your purchase price. You either look elsewhere to buy in a less risky zone where the insurance might be lower, or you go to the buyer and say, hang on, I can only give you $900,000 because it's going to cost me $100,000 to insure my house. And if you have a mortgage, you cannot get a mortgage without insurance. So the bank will not lend you money unless you have insurance on that house because otherwise this could happen and they lose all their money too. So yeah, so there's a bit of a download, but this is going to impact house prices. It's impacted insurance companies' share prices because now people are saying, oh, the increase of these events, why would I invest in insurance companies? Because they're just going to have to pay out more frequently now. Yes, they can increase their premiums, but is this going to keep happening? And also this economic loss and these payouts and this climate disaster, we end up paying for because we are the ones that foot the bill for those increased premiums, which can lead to inflation. So it all comes back to us as people paying for this, not only physically but financially.
Do you know what I think could be kind of interesting to look at in the investing club would be businesses or technology or emerging companies that are either trying to predict natural disasters or like prevent them from happening. Yep. I was speaking to someone while here in New York who was saying that she angel invested in a private company that's doing something similar to that. As we all know that this is going to be happening more and more, there will be a huge reliance on like the ability to predict or like, I don't know, I think that could be kind of an interesting...
I 100% agree. I think it's prevention though. And the way you prevent this from happening is by investing or supporting companies that are reversing climate change or trying to have the lowest impact on the environment. It's investing in environmentally positive companies. It's investing in sustainable companies, responsible companies, all of that. And the easiest way you do that is investing into ESG ETFs, for example. And that's just environmental, social, and governance ETFs. So there is ways to do it. If you're sitting here feeling helpless, there is a way that you can support the planet.
Vic, do you know what would be quite cool is if next month in the Investing Club we focus on some ideas in that space. Like we look at a few companies or ETFs that really like support that movement. And if you're listening to this and you're wanting to invest in places that are what we've just spoken about, we'll link the investing club in the show notes, because I think that's the thing, right? There's such a greenwashing, there's such an overwhelm of like, okay, I do want to invest in those types of things, but I don't really know what to put it in. That's the whole point of the investing club. So we can do the research and come back with some ideas.
Finally, if you don't have insurance, you're wanting to get insurance, we do have a really great episode, which is Raising the Curve, episode 63. And it's all about sorting out your plan B.
That was particularly though health insurance, right? So it might actually be worth looking at doing one that's more
home and contents.
But that is a really good episode. And also like the idea of losing your job.
It's all about, it's protecting all assets, and you are an asset yourself as income. So it was about protecting that, you're right. But it just goes into the importance of insurance as well.
Thank you so much for listening to The Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, biz and stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you did hate it, please, don't leave one if you hate it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week and see you next Monday.
Bye.
Bye. Sweet. Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.
No, actually though, new episodes out every Tuesday. Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.